Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's get you some big voices on the market now. Things have never looked better from the Indian macro perspective. That's the word coming in from the top team at Deutsche Bank India. They add that the headroom for growth is unparalleled in the country right now. Here's a slice of the exclusive chat we had with them earlier in the day.
It's very difficult to look at valuations in isolation. If you look at India in its entirety at the moment, I think from a macroeconomic perspective, things have never looked really better. There's a lot of stability, a lot of resilience. And we think that the prospects going forward also look very, very good. So you could say that the markets have really run up, but a couple of things that you need to bear in mind with respect to that. First and foremost is that a lot of the structural changes that the government introduced haven't really paid off yet, and so the upside for that is significant. Then you're seeing growth, globally, and then you're seeing, a lot of, liquidity internationally. All markets seem to be, doing exceedingly well. And when you look at the headroom for growth within the large economies, I really don't think there's another economy out there which, compares favorably with India. So whether we take the view globally or within the country, I would say that this is one of the markets that we'd, put as one of our top picks. Absolutely.
Okay. Pratik, morning. Come in on this because, the views are positive, but the Nifty target that you guys have for the full year of December 2018 is 11,500, which is not too far away from here. Are there any concerns?
Well, I guess the concern is really valuation. The markets have already front-loaded a lot of the earnings expectations which are coming in. Remember, we had a 30% return on the Nifty last year in dollar terms, and that was one of the best performing, India was one of the best performing emerging markets globally. But having said that, going into 2018 and looking into FY19, this is the year when we're expecting earnings recovery, corporate earnings recovery, which we haven't seen for the last 4 or 5 years. We've seen earnings growth more in the single-digit range. After a very long time, we'll start seeing double-digit earnings growth, but the valuations have already gone up quite a bit. Now, on the bullish side, one can say that, look, this is the phenomenon globally. Most asset classes, including equity markets globally, are at high valuations. But in India, we went up despite relatively weak foreign flows. It was largely driven by domestic flows, which we expect will still remain strong. So while we are expecting a strong cyclical rebound in the economy as well as in corporate earnings, a lot of it is already priced in. So that's why return expectations have to be moderate. We cannot expect the same 30% kind of growth in the markets once again in 2018 in our view.
Rahul, what I wanted to ask you was that all through the last 3-4 years, it was the macros that were strong, and it was Pratik who was not delivering, in the sense the micros were not delivering. But now, I mean, how are you looking at the bond markets? Already, we touched 7.4, chances of global inflation and domestic inflation picking up. So where is this yield for 2018?
See, there are two aspects to the whole bond market or the debt side of the business. The rope is slightly tighter this time compared to a year ago. RBI has to balance the whole concept of fiscal prudence that the government is going to show or not deliver. And the other sensitive factor that has come into play is oil. We didn't anticipate oil to rebound to the levels that it has touched. We don't yet know whether it will continue to stay at 70 or rebound back to a sort of lower level and settle at that. I think that's the one aspect where the government has to follow, and RBI will therefore look towards that as an indicator to see whether the rates need to be hiked up or not. And the other aspect is fiscal. Yes, in the longer scheme of things, there is growth, and the macro has to sort of be delivered, and you're getting into a era where I think after the two sort of shocks of DeMon and GST, you should not potentially have another situation where growth gets impeded by a rate hike. But markets are already factoring, as you rightly said, about a 40-50 basis points over the next 15 months. But I think it's the fiscal that will first, and the oil as step 2, which will decide whether there is scope for a rate hike or not. Because effectively on a real interest rate aspect, if you look at it, with the inflation sort of expected to be in the 4.5 on a sort of 12-month basis, and repo at 6%, you still have 150 basis points real interest rate. So which is something which RBI has felt comfortable in the past with.
So you're saying that you wouldn't pencil in a rate hike in the current year?
I think
Calendar.
the guidance, no, I'm not saying that. I think the guidance this time around is not that straightforward. It'll be a function of where the fiscal goes in terms of the guidance for 2018-19 and oil prices. So this time it has to be a little bit measured from that aspect. But really the growth is an important aspect for the economy, and we are still not at the levels that we should be for inflation to become a bigger worry than from a growth point of view.
No, I just want to tie you down to a number. Can you give me a range for the 10-year